Bitcoin's price continued to hold firm near $30,000 Thursday. The leading crypto has been trading in a relatively tight range for weeks as crypto and stock markets have struggled to regain any notable upward momentum following a broader sell-off in May. And Bitcoin could see its price challenged again if it doesn't rise above $40,000. As Nicholas Colley, a strategist at DailyFX, a research website that provides technical analysis on financial markets. While the Bitcoin background is marginally more positive, it should be remembered that this is from a depressed price level, says Colley. The technical outlook is neutral at best and Bitcoin really needs to trade back above $40,000 before any kind of bullish outlook can be confirmed. The crypto market has also been increasingly tracking the stock market lately, which combined with more mainstream adoption and the slumping prices we've seen to start the year, makes it even more intertwined with macroeconomic factors, experts say. Ethereum has followed a similar pattern. That means factors that traditionally affect stock markets, like rising inflation, geopolitical crises, and concern over tighter monetary policy by the Fed, are also affecting the crypto markets right now. The Fed delivered the first rate hike in 22 years on May 4, in an effort to combat inflation, which slowed to 8.3% in April, according to the latest inflation report. Some experts also believe that Terra USD, UST, one of the largest stablecoins, played a role in Bitcoin's crash in May. UST is intended to be pegged to the US dollar, but it sank as low as 12 cents and collapsed in a pseudo-bank run as investors panicked and sold off their tokens. At the start of June, Terra relaunched a new version of its failed Luna cryptocurrency but not USD. Bitcoin hasn't been above $50,000 since December 25, 2021. Despite the ups and downs, Bitcoin's price has seen a 50% drop in value since its all-time high above $68,000 on November 10, set back by surging inflation, lagging recovery in the job market, and the Fed's ongoing signals that it would begin winding down pandemic measures to support the economy. Bitcoin's price has been between $29,000 and $31,000 so far this week. Here's how Bitcoin's current price compares to its daily high point over the past few months. Though it has had a slow start to the year, Bitcoin still entered 2022 on a relatively high note, with a strong November and early December that gave way to the recent downward trend. After starting 2021 in the $30,000 range, Bitcoin increased throughout the year and hit its current all-time high when it went over $68,000 on November 10. Despite falling back significantly from its latest all-time high price, many experts still expect Bitcoin's price to rise above $100,000 at some point, describing it as a matter of when, not if. Shortly after Bitcoin's latest all-time high in November, Ethereum marked its own new all-time high when its price went over $4,850. Ethereum has seen similar volatility following the latest high. Bitcoin hit its first high of the year in 2021 when it went above $60,000 in April, and the price movement since then highlights the cryptocurrencies' volatility in a time when more and more people are interested in getting in on the action. What does this price drop mean for crypto investors? For those who invest in crypto for the long term using a buy and hold strategy, price swings are to be expected. Big dips are nothing to be overly worried about, according to Humphrey Yang, the personal finance expert behind Humphrey Talks, who says he avoids checking his own investments during volatile market dips. I've been through the 2017 cycle, too, Yang says, referencing the crypto crash of 2017 that saw many major cryptocurrencies, including Bitcoin, lose major value. I know that these things are super volatile, like some days they can go down 80%. Experts recommend keeping your cryptocurrency investments to under 5% of your portfolio. If you've done that, then don't stress about the swings, because they're going to keep happening. According to Bill Noble, Chief Technical Analyst at Token Metrics, a cryptocurrency analytics platform. Volatility is as old as the hills, and it's not going anywhere, Noble says. It's something you have to deal with. As long as your crypto investments don't stand in the way of your other financial goals and you've only put in what you're ultimately okay with losing. Yang recommends using the same strategy that works for all long-term investments: set it and forget it. If this type of extreme drop bothers you, you may have too much riding on your crypto investments. You should only invest what you're okay losing. But even if the drop is making you rethink your crypto allocations, the same advice still stands: don't act rashly or upend your strategy too quickly. Reconsider what you might be more comfortable with going forward, such as allocating less to crypto in the future or diversifying through crypto-related stocks. and blockchain funds rather than directly buying crypto, though you should still expect volatility when cryptocurrency markets fluctuate. Don't check on it. That's the best thing you can do. If you let your emotions get too much into it. What if you're interested in crypto, but haven't yet invested? Yang set it and forget it approach to crypto reflects his philosophy for investing in the traditional stock market. But some experts feel cryptocurrency is too different from traditional investments to draw any historical comparisons. That's why Ashira Nelson of Savvy Girl Money is staying well away. Nelson primarily invests in low-cost index funds because I can see history on that, she says. The newness of cryptocurrency and lack of trackable data make her wary of these crazy swings. Potential investors looking to buy the dip should understand that fluctuations are par for the course, and be prepared for this kind of volatility going forward. Even if you invest now, with prices relatively low, be prepared for them to fall even more. Again, only put in what you're comfortable with losing, after you've covered other financial priorities, like emergency savings and more traditional retirement funds. What's behind the latest Bitcoin drop? Many investors see Bitcoin's price swings as part of the game, but volatility is tough for individual investors to deal with, Noble says. Like Yang, he warns against selling too fast. Recent price fluctuation has followed surging inflation, ongoing uncertainty over the country's lingering fight with COVID-19, and new regulatory actions by the US government, including Biden's recent executive order. In an industry as new and unproven as cryptocurrency, it doesn't take much to drive big swings in price. More generally, new short-term investors who are selling their holdings in reaction to the latest drop may be contributing to the drop in Bitcoin's value. According to a report from Glassnode Insights, a blockchain analysis firm. While fluctuations are expected, Noble says he's been surprised by some of the recent big drops. I thought the market was maturing and these things would be less frequent and severe. Some of the drops have been caused by a combination of factors, Noble theorizes, from excitement about low-quality coins, to negative remarks from Elon Musk, to China's recent crackdown on crypto services. This mix of factors has potential to make sell-offs all the more violent, says Noble. He likens the drop to the stock market crash of 1987, from which the markets took months to recover. But because crypto moves a lot faster today than equities did in the 1980s, Noble says we may see a quicker recovery. Don't panic and puke, Noble says. If you keep your position small, you can try to tolerate the volatility. What do you think of our video? Let me know in the comments section below. If you enjoyed this video, make sure to hit that like button. Also subscribe to our channel before you go.